Let me just do this. Yes, most definitely. If you're watching this lesson on YouTube, make sure you subscribe to the channel and make sure you hit the notification bell, so whenever we post a new video, you're able to get notified. And make videos helps with algorithm of YouTube, because when I reach out to more people to understand the knowledge, and all the stuff. So otherwise, welcome to tonight's session. I think we had a bit of a chat with Noel earlier. We're talking about mainly talking about the signals, and also we also had a question regarding in terms of the sequence of our trading and our trading plan. So we're just gonna had a bit of talking about that, but tonight's session is mainly we're just gonna we are focused on supply and demand trading. But with supply and demand trading, there's a lot that are involved, which I don't want to call them behind the scenes, but there are things that push the market to move in a certain way, so which is very much important for me to because I feel like, a lot of us in the trading world, we don't necessarily touch those things. Let me just do this. Let me just share the screen where I have my details. Let me just share that screen while I'm just sharing, where I have my details. Just share that screen while I'm just sharing, where I have my details. I'm getting a bit of feedback. Let me just sort that out. Feedback. Let's see if that feedback coming from. All right. Okay, let's do. I think I need to mute. Okay, mute all. Oh, I think it's 10B, so on that side. Okay, perfect. Okay. All right. But what you can do is, if you got a question, maybe feel free to stop me and just ask question, because I don't wanna be going on, and then basically most of the session that I'll be doing on the Saturday are mainly not necessarily just starting off, because I know a lot of gents that are traders that are joining us tonight they've got experience in trading. So hence, we want to make this more of a discussion than just me talking, when I made with this discussion. So yeah. Okay, let's just dive deep. So these are some of the details, always make sure that if you want to get in touch with me, understand we can definitely get in touch. So this is my Instagram, that is my Twitter, that is for calls. I think, yeah, 078, that is for call, that is my email. Also, I've also been introduced to TikTok, so I've got Mr. President Wonga on TikTok. So I'm just started, to be active on the TikTok space. Otherwise, just know that we're all about trading, investing, and also about education. That's basically my passion. I want to make sure that everyone understands, and also being on radio and engineering and all that stuff. But otherwise, I think we've once on this, that if you do this, you can definitely help you in terms of being focused in your trading. So this can help having a daily target and a weekly and a monthly and the first year target of what you can achieve. So you need to think trading in terms of long term. Otherwise, let me just stop here, because tonight we mentioned that we're going to be talking about trading, and we're going to be talking mainly focusing on supply and demand. Okay. Obviously, Millionaires Intelligence Institute, this is a company. Otherwise, just put a disclaimer. A disclaimer, you must understand that it's very much important to note that everything we're talking about tonight is not a financial advice. It's for your educational purposes. It's also to understand, because trading Forex or trading commodities or future, you can have a lot of losses and you can definitely lose a lot of money. So make sure you understand the risk that are involved, in trading. And also, don't trade with money you can afford to lose, with meaning do not trade with your last money, and do not trade with money also just to touch base on this. Supply and demand trading. So there are basically 5 rules of trading in supply and demand. So we always say, always look towards the left. Okay. Always saying, always look towards the left. And yeah. Those are the rules. Always look towards the left and just make sure that I'm sharing the right screen. Yeah, most definitely best. Okay. So always look toward the left and gonna sell a supply zone. When we talk about supply zone, talk about the zone where there are a lot of there's a huge liquidity of selling. A lot of sellers are there are available, meaning as a retail trader, because you don't have the power or enough money to move the market when the institutions and the banks are selling, make sure you are also selling. So you are moved in the direction of the banks or institution, which people call it move in the same direction as a shark. If the shark is going right, make sure you're going in the right. Otherwise, you get eaten. You know, meaning you lose your money. And then buy at demand zone. So we're gonna highlight basically those points. What are some of the demand zone, and how do you definitely identify the demand zone? And always use a stop loss. It's very important. Always use a stop loss. I've actually noticed a lot of traders in the trading world are talking a lot about prop firms and all of those things. But it's very much important to use a stop loss. Stop loss is very critical because it means you're not gonna lose all your money in your trading account. Some people will be like, no, I was trading and this trade, if I did not have a stop loss, it means it was gonna be going my way because it just touched a stop loss and then just went opposite. No, if it did not touch a stop loss, possible you could have lost all your money. There are a lot of books that are written that are talking about a stop loss. So make sure whenever you are trading, always use a stop loss. So even in prop firms trading, I've noticed some of the prop firms, they can give you like a try again if you've been using a stop loss. They can see, okay, but this person, yes, they might have made some mistakes there and there, but they were using a stop loss. Because of that reason, you had a stop loss. They are more likely to give you a second chance, you know, in terms of trading your prop firm account. So it just gets us started on this. Okay, for example, what is important to note when you're trading S&D? Remember, most of the session that we do, we mainly focus on understanding the theory part, and also we do analysis in the same time because you want to be doing lessons and also do analysis. So how basically is mainly about applying the knowledge. A lot of people have got the knowledge. A lot of people, obviously, you can have the right knowledge and the wrong knowledge. Okay. What is important is you applying the knowledge. Is the knowledge proven to work over time? Okay. If it's the right knowledge and the right system and the right strategy, obviously, over some time, you can see progress, you can see results, you will test the concepts. If it's working, then you've got the right knowledge. Sometimes that's the thing of not having a mentor. When you don't have a mentor, you basically don't know whether what you are learning, does it work or does it not work. But with consistency and having a mentor, that is basically where you can know that actually this knowledge does work, because you've got someone who's actually done a back testing of that knowledge. It's almost like, makuthiwa indlela ebuzwa kwabaphambili, is because those people have walked the journey and they've tried and tested those system. Okay, so let's just get on this. So basically, when we're talking about supply and demand, when you talk about imbalance is basically where you've got a lot of buyers, where buyers are exceeding the sellers. A lot of people are wanting to are buying that currency. Okay, when you've got a lot of sellers more than a buyers, that's where you're going to experience a drop. So a drop is basically the price of an instrument, whether it's a currency or it's a commodity like your oil. If there's a huge supply of oil, meaning, for example, just like it happens during the times of COVID on the pandemic, there was a huge supply of oil. So in that time, when there was a huge supply of oil, there were not many cars that were moving because of COVID. A lot of planes there was not much of a flights that were moving around because of COVID. So in that time, there was a huge supply of oil. So in that time, chances are, not chances are, basically the price of oil was dropping, because it's a pandemic. There's a lot of lockdowns across the world, meaning not much oil is being used. So there was a huge supply of oil. So you saw the price of oil dropping. You saw the price even of oil companies, shares of those companies, they were dropping because there was huge supply, not many people buying. A lot of people are selling. And then recently, lately, the economy is opening up, manufacturing is coming back. You've also got a war going on. Now there's a huge demand of oil. What you get there, you've got a buyers exceeding sellers. You've got a lot of people that are buying oil. There's a huge demand of oil. Why? There's a limited supply of oil. Number two, there's a demand of oil. So people want to buy oil. So what you have is a rally. A rally is when the price is going up. When the price is basically it's a buyer's market, people call it. It's a rally with more buyers than you've got the sellers. So the price will actually go up. When we are talking about a balance, we're talking about the reason saying there's a balance and imbalance. The balance is whereby it's a time. Welcome TAT, welcome one dealer to the session. So we just in the session, basically, we just talk about the balance and the imbalance right now. Okay. So when you talk about the base, it's a balance. So it's where you've got the sellers, where basically you've got the sellers and the buyers. Some people use the word equilibrium. Mostly that word is mainly used in science when people are doing chemistry. They're saying this has reached an equilibrium phase where basically there's a balance of the two, the balance of the buyers, the balance of the sellers. It's where you've got the price that is not moving anyways. Some people call this phase accumulation phase, where the price is not moving aggressively going up or aggressive going down. So this is basically what we call a base. A base, in the terms of a war, a base is where the soldiers will come together and team up. Is called at the base. Where they strategize and they plan and they talk. They say, you know what? This is the next movement. So it's basically the base where they strategize. Are you gonna go to the left or go to the right? So in this case, it's where you've got a lot of things that are going on within the market, and whereby the banks are meeting up. We've got a couple of meetings that are going on before the price actually make a move, whether the price is gonna go up or the price is gonna go down. Okay, so that is basically the importance of the base. So within the base, sometimes a base can be one candle, sometimes a base can be in terms of what I'm talking about the now, looking at the base in terms of a candlestick pattern. Okay, a base can be a doji, a base can be a hammer, because it's a base, it's like a meeting. In terms, like I've mentioned before, in terms of a soldier or war term, it's where the soldiers, they will keep the commander, everything, the snipers, all in one place. They're talking, it's okay. This is our approach. This is how we're gonna do this. It's where they are teaming up, they're planning, they're talking, strategizing on what to do next. It's a base, because after that base, a base like accumulation of strategies, accumulation of orders, getting orders, and then when there's a huge, then they see, okay, you know what, we need to go up and then drop. That's the movement of the base. So after the base, you'll see something, some people call it a stop hunt. A stop hunt is basically when the price is going opposite than where it needs to go. Stop hunt is hunting for stop losses. It's like we want to go down, but before we go down, let's first go up, pick up some orders, and then go down. Or let's go up before we go down. Let's first go up and pick up a couple of orders and then drop. It's the same thing that happens in most of the movies, like those crime movies. What they do is they create a distraction. It's like sometimes if they want to rob someone, they will argue about something. And then while you are focusing on that argument, something is going on the side. It's a trick. Even in the market, they do this. Even in crime movies, they do this. It's like a way, even people, they're like, hey, I was so distracted. I don't know what happened to me. It's a trick. It's even in the market, it does happen, whereby you are distracted by something kanti the plan is in the bigger picture, okay? So I hope you guys are understanding this. You guys, if you are still with me, you're still with me, you can just type on the chat box, Mr. President, I'm still with you. Yeah, because it's very important for everyone to get this, because this is like the foundation of what we're gonna see in the charts, okay? Foundation. So we mentioned number one, a rally when the price is pushing up, where there are a lot of buyers more than the sellers. In the drop, there are a lot of sellers more than the buyers. Okay. In the base, it's like gathering accumulation of orders, getting the buyers and the sellers, getting what's going to happen, getting to see where are the stop losses, where are the pending orders, are we going to go up or we're going to go down, which direction we're going to take. It's like a lot of it's like the same thing I've mentioned before. There's a lot of stop hunting after the accumulation phase. There are a lot of distraction, meaning in the crime movies they do this a lot of times. So I hope we are getting this, because it's something that is very much exciting, that I feel if you can get this, I'm telling you, you're gonna be a master trader, you're gonna be a master, you're gonna be like a sniper in the market. Otherwise, welcome Spay, welcome Sanjile. And yeah, man, we've been here with Teti and Stembi. So it's been good. Yeah, otherwise we just talk about supply and demand trading, the method of it. And then when you talk about the continuous base, okay? A continuous base is a kind of a base that continues the direction of initial price trip before the base occurs. So which means basically there are two types of continuous base that are base drop. So this is a drop, base drop. So, and then you've got a rally, base rally. So the price was pushing up and then it moved back, and then again it's continue moving up. So like I've mentioned, and then we talk about the drop base drop. This is a drop base drop, meaning the price was dropping, it got to a base, and again it made another drop. Okay, I'm just gonna run through, and then it's a rally base rally, it's another base. So what I want to do now, I just want to get on the charts, because I feel like, let's first do this. I'm thinking let's first do this. Let's first, because I know last week what made some changes or movement in the market was inflation. A lot of people talk about why is inflation. It's because the next meeting about the potential hike in interest rate is going to be on the 26th of July. So, and also, a lot of people have asked me why, Mr. President, you always post the economic calendar. Is because it's very much important. A lot of big banks, or mainly, let's just say, a lot of the government are looking at the economic indicators right now. Because number one, if you are going to elections, when I say election, I mean, if you're going to be having election next year, a lot of people, what they want a government that can create jobs, right? So a lot of unemployment numbers, a lot of people are looking at them. Is the government growing economy or not? If it's not, then obviously for the guys that are pushing, to be elected, it's going to be a problem for them, It's going to be a problem for them. So now, if the numbers of people that are employed is going up, they're going to be very much excited about it, And if the numbers are going down, which means obviously it's not good for them, and it's not even good for their campaign, I was trying to show the numbers, but it's not showing. But otherwise, let me do this. Let me just go over the charts so we can just discuss how we apply these concepts, that we've just discussed, because we need to. The importance of having knowledge is okay. Sharash. Okay, Stemis will say still following. Space like okay, thank you. Okay, that is good. That is good. Welcoming Pickle on the session. Yeah, otherwise, man, remember this is basically gonna be recorded. You're gonna have it on YouTube. So make sure you also I'll definitely share the link on YouTube for our YouTube channel. And what I also do is I want to make sure that obviously make sure you subscribe to the channel, because it's good for our channel to grow. And I'm trying to do this. Okay. I think by now just want us to go over the charts. So yeah, let's go over the chart. Okay. Yeah. So what happens last week? The numbers we were looking for was the inflation rate. Why is that? Because number one, we are in the market where a lot of people are talking about recession. Sometimes you know what happens in terms of fundamentals. Fundamentals are very tricky. Okay, they are tricky because the reason NFP moves the market a lot is because they are released early in the month. So the earlier the economic data is released, the more likely it's gonna move the market. Okay, that's number one, very key thing to note. Also, economic data, what is important also is about the season they are released. In a time of political or potential elections, a lot of people are looking at the economic structure. They're looking at GDP numbers. Is the economy growing or not? Are we in the recession or not? Did the government fail to push the economy out of recession or not? They also look into things like interest rates. So inflation, what it does that all the central bank, what they do, they look at the numbers of inflation, the core inflation, the CPI, the PPI. They look at those numbers. If the inflation is obviously dropping, it's good for central bank. But if inflation is going up, meaning meaning the purchasing power of your money is going down, the price of good is rising. What happens there is if inflation is going up, the Central Reserve Bank, more likely to increase interest rates because they're trying to control what inflation. You know, so a lot of people look into that. Are you gonna get an increase? Are you gonna increase? So what increase is good for people that are buying that currency. For example, if you've got increased interest rates of the rand, like the South African Reserve Bank, the increased inflation, what you're gonna have a high interest rate for investors, and the people that are investing, they're more likely gonna buy the rand because they're now gonna get higher interest rates on the rand. But the people that are buying things on credits, as you know, a lot of people buy things on credits in our days, buy their cars, they buy properties on credit. So that's gonna affect how they spend money. So the less they spend the money, the less money that is available on the market. When the less money available in the market, meaning there's now more less money available than the goods. So you see the price of goods actually dropping. That's why when during December, a lot of people are not. It's not. That's why during December you see a lot of retail sales going up because people are buying, and retail sales going up doesn't necessarily mean that there are more people employed. It just means that a lot of people that are buying stuff because it's December. So that's what I'm saying. In terms of understanding economic calendar, economic events, or fundamental event, it's very important also to note the season, or also are we in the economy that is growing, or are we in the phase of recession? So those things are important. Remember, these economic indicators or these economic or fundamentals, basically you've got the government watching them, you've got the big banks watching them, you've got the hedge funds watching them, you also got the Central Reserve Bank watching them. So these are the big guys that are actually moving the market. And also you've got the retail traders that are reacting on those numbers. Okay, I think in our next session, we're gonna cover fundamentals on how we mix them in our trading as we do in terms of fundamental. Okay, let's just take a look at this is USD CHF. If you've got any pair that you want me to use an example, maybe let's say a pair you've been trading this week, it's totally fine for you to share that pair, and I'll definitely take a look at that pair. Okay, so this week, remember, let's first start off with this. This is USD CHF. This is USD versus Swiss franc. So this week, the main obviously was the inflation numbers in terms of the dollar. Okay, let's take a look. Firstly, this day here, it's Friday. Okay, I want you to note that this is Friday. You saw on Friday what happens? There was a pulling back in terms of USD CHF. This is Thursday, continuously dropping. and this is Wednesday. That huge drop. Why that huge drop? Release of the numbers of what? Inflation. And then you've got this here drop, and this is Monday. Okay. So on Monday, you've got that structure, which is M. Okay, we've talked about this last time. So now what I want us to look at, we're going to look at the structure. So M is basically, we talked about this in our last section. M is basically a double top, which is right there. Okay. So what is happening here? Okay, let me just use this arrows. Arrows. So right here. Okay. And again, another one here. So you've got this structure. This is Monday. So market opens, goes up, come back, and then again, then from there, drop, right? So this is basically an M for selling, right? What are we looking at now? We're gonna look before this drop, do we have a base above which was looking for at the supply? And you can see this here, even at that level, we're gonna look at the high time frame. Look at that level. You can see right there is a base. What is that base? Is that candle over there. See this candle? When I highlight using this, that candle over there. Obviously, I'm gonna use a higher time frame to check. See that candle? So any candle like this, like your hammer, your doji, those are some of the candles you see them on those points. Because when I say doji, I mean sometimes you see this type of candle. See this candle is a smooth drop, and then this candle. So this candle can be used as a base, and also this candle can be used as a base. This candle can also be a base. Why? Because this is a drop, and then this is a base, and then another drop, a base, drop. So remember, a continuous base. We talk about this. Otherwise, let's first do a higher time frame. Okay, higher time frame. Okay, let's change the template. A higher time frame, we are looking at H4. Okay, let's zoom out. Okay, let's do this. Okay, this is a daily of this, obviously. Oh, okay, I need to admit someone. Okay. Welcome, Ngubeko. Mr. Jolly is joining us. Yo. Okay, otherwise we've got this. Okay. So let's zoom in the daily. Okay. Okay. This here. Okay. Just a minute. Remember, we talk about supply and demand. So this level here. Okay. Let me just. I always mention this. I like changing from the charts, normal charts, and I change it into what? A line chart. Okay. So this is the breaking of a level. Sure, time. It's not against, it's against us. Okay. So I'm gonna change that to S, meaning support. And I'm gonna change this here. So this here is I'm gonna change that, put that and say that was a demand. Okay. I'm gonna change that. This level here. Okay. Okay. Because I just want you to see this. Okay. So what is going on here? Why are we marking this level? We are marking this level because it's you need to note something here. Okay. What happens? The market is dropping, right? As the market is dropping, it will come back to the level and create a base. A base, like I've mentioned before, is where the market is a balance. It's not going up, it's not going down, it's just moving sideways. It's basically what we call accumulation. When the market drop, this is a drop, and then the base, and then the drop. Okay. What I want you to see now, if it changes to candlesticks, you can see the market drop. If a market is dropping from a base, chances are the market is going to come back to that base and react to it once more in the future, which is why we always say, always look left. When the market is moving in any direction, for example, if the market is here, look left. What is going on the left? Okay, there's no base. Okay, market moved up to that level. Okay, fine. Looking left, you can see that. Looking here. Let's change to candlesticks. Okay, we want to see in this zone. Can you see the type of candles that are created here, right? Can you see them? See these candles, and then after these candles, see these candles. I'm just gonna highlight this one. You can see there was a drop of black candles, and now these white candles. These candles are just opposite momentum of the ongoing drop. So this candle is opposite, and also you've got the doge, you've got a hammer, but these are the candles, but before a continuous drop. Okay, what you're gonna see, because this level, see this level were broken. 1, 2, first touches level, come back again, created, some people call this obviously S1, S2 support level. People bought here, so the bought here again, the price went up, but now the price is doing this. When the price drop below this, and then this is the same level, see the reaction on that level. So this is basically what we call a sub zone. The price drop below, and this is a base. The base is where decisions are made. Base is where you've got accumulation that are made. And then after this a base, a price just dropped. Okay. When the price dropped after the base, that base will be retested. Okay. Level broken will be retested again. So another retest. Remember, this is a daily chart. So from this movement here, it's a lot of days, with meaning be patient. And you can see even in between, when the price move from there to there, it's just retesting in that base. Okay, retesting this level. Okay, just do this, retesting that level of the price, come back, retest the level, drop, come back, retest, and then drop. So this 1, 2 is just creating liquidity for people to put their stop losses around here. But this is another level of what? Supply. Level of supply is here in the base. Come back, and then go to that level, come back, create another section of R1, R2, and this like a fake out. Knowing above this level of R1, R2, there is what I call a supply level. When the price come back, you can see these candles, and then the price reacts to the candle, then drop again. When they come back again, obviously, in a form of what people call it this year, I call it compression. Accumulation again, accumulation back to the supply level, and then another drop. And you can see, if you're looking at the daily, this is a level of supply which was broken here. Drop, creates a base, drop again. It's almost like soldiers, they were going down this way, and they're like, okay, you know what, guys, before we go further down, let's first have a meeting. How you gonna move? Okay, let's drop. And then obviously before that drop, there was this fake going up. People like, this market is moving up, so let's buy. And then when the researchers started buying, remember, before the banks buy big or sell big, they need to have a lot of people that are selling. Okay, so in this case, they are selling. They need retail traders to start what? Buying. So they're gonna show you opposite movement of where they're gonna go. So they went up and then drop. 1, 2, 3 days of drop, and then a pullback. Obviously, they can't continue just dropping over and over. They need to pull back. Why? They don't have unlimited liquidity to push the market down, further down. And if they had unlimited liquidity, obviously they can just crash the market whenever they feel like it. Okay. So 1, 2, 3 drop. People are saying, no, this market is dropping. And then a pullback. This pullback obviously is like 50% pullback in some of Fibonacci, then a drop. So that's basically what happens. From the Monday, my expectation on this obviously is always going to be retesting on the base. Okay. And let's just do this. I think going to the 1 hour, you can see it's been, just change this. Yeah, I hope everyone is getting a bit of understanding of this. So what I'm expecting obviously is we say this, since Monday's been a drop in terms of USD CHF. I think we saw the same thing in terms of the, I think, just using this.